The stock market had a massive correction the last week, and we're going to go over what exactly happened. We're also going to go over our portfolio with what we bought, what we sold, and why we did it. Ladies and gentlemen, welcome to Wealth Down with me, your host, Novo PM, bringing you once again a week wrap up. We're going to talk about the week from the 16th to the 20th of December. Also, we're going to talk about the biggest financial events. So let's get started with what just happened on Wednesday. On Wednesday, the Fed, the US Fed, had once again their meeting, and they had the press release where Jerome Powell, the Fed chair, came out and cut the interest rates with 0.25%, lowering them down to, let's just take a look here, from 4.75 to 4.5. Now, this was expected and nothing happened, except then the Fed chair Powell came out and said that in the upcoming year, that is 2025, they're only going to cut 2 times. This is also interesting because kind of the market was expecting this, but the market was kind of overbought. So most of the participants in the market saw this as a selling opportunity, which they also did, and sold off because that wasn't that big of a news that the Fed is going to cut only 2 times, because it didn't say when they're going to cut and how much they're going to cut. And also, if it's needed, they're going to cut multiple times. If it's really needed, there's a crash coming. But lower interest rates is what the market is looking for, and as soon as possible, of course. And because this is not what is going to happen, the market reacted negatively. Also, they said that in 2026 they're going to cut 2 more times, and so far and so on. And they're targeting somewhere around 3% their target interest rate. So let's go over our portfolio with what changes we made. Our portfolio currently yields a 2.59%. The ECB also cut their interest rates, so meaning that I'm only going to get 3% on my cash holdings. But our cash holding is now down. Let me just check down here. Is currently down to 0.11%. So we are pretty much exactly as mentioned in our previous week. We are pretty much completely invested in the stock market. Now, I want to mention here that we did our risk assessment for the stock market the last week, and we said that there's a 50% risk in the market, roughly 55% or something like that. I do have to check also you can also check the our video or our blog. They are listed in the comments section below. But after that, on Wednesday, I remembered that I didn't take one single factor into consideration, and I updated my risk assessment before the Fed chair had his press release. And that was what will happen if he mentions future cuts, because until then I only took into consideration what will happen if he does not cut or something else going to happen. But what exactly would happen if he mentions future cuts and if there will be fewer than expected? And that is exactly what my update on the risk assessment was, and I was correct, because the risk jumped then up to over 70%. I believe it was 75%. Also check out the video from Wednesday where I'm mentioning this, and that is exactly what happened. Risk rose in the market, and we had a massive sell-off, a good enough correction. We hit the 50-day moving average. Let me just check here, because on Wednesday, let's check here the date, on the 18th of December, we pierced the 50-day moving average, the green light here. Then we traveled a bit under there, and then on Friday we closed, I believe we closed slightly above the 50-day moving average. We opened up above, we also went above the 50-day moving average, but then we closed underneath, roughly above it. So that is positive. This still means that the Santa Claus rally is still in place, because we tested this and we came back. So if this on Monday, because it closed positive on Friday, if this on Monday continues on, that is pretty much baked into the cake. There's no 100% guarantee, but I would suppose that we are going to get a year-end rally, maybe lasting into January until the inauguration, but who knows? So please be careful. But as I just announced, I am 100% invested in the market. I have no more cash lying around, and I'm also trying to bring some more cash on Monday, maybe even, and invest in a couple of things. So let's get to the portfolio. There were a couple of changes. We also received a couple of dividends, and that is on Coca-Cola we received a dividend, and on Duke Energy we also received a dividend. On Coca-Cola we received a $0.48 per share, and on Duke Energy we received a $1.04 per share. That was a good dividend payout from these two companies. We also averaged into our S&P 500 index, and we're going to talk about that one just in a couple of minutes, because we did make some changes to our ETF holding. So that's it for the dividend. Now let's get to what we changed in our portfolio. As you can see, we have 30 minus 3, so 20 minus 4, 26 positions because we closed up the following position. We closed up Hershey's. Hershey did his job. We had a little profit there. We took some profit because we wanted to invest in something else, so we traded that. Also, I do believe, let's just click here on Hershey's. Hershey is going to run into some problems due to the fact that, as you can see, they're pretty much down here. Maybe because if it is a defensive stock, but with the GLP-1 drugs out, the entire sector, that's why I also sold my Coca-Cola. I don't have any McDonald's stock anymore, although Coca-Cola, McDonald's, and Pepsi look amazing, and Pepsi is one of the big dividend paying companies out there, but I'm out of everything that has to do with sweets, with food, with sugar and fats. I'm out of it. Next up, we sold Boeing due to the fact that I closed down my position in Boeing. It has a massive rise here, but as you can see, it's overbought. So this for me was a technical trade. I would like to buy back Boeing because Boeing is massively, let's take a look here, the 5-year chart, it is massively oversold, and Boeing is one of the company, I might be pronouncing Boeing a bit wrongly here, so it's Boeing company, ticker symbol BA, and Hershey's company, ticker symbol HSY. So Boeing is one of those companies that is just too big to fail. So if Boeing has a good enough pullback, I may consider buying back into Boeing. For the moment, we took some profits and we left Boeing. As I said, looking forward to add back to that position if the opportunity is shown. Next up, I closed my position in the S&P 500 ETF that I was dollar cost averaging into it, mainly because of this massive pullback. I just might add back to it, but for the moment, so it had, they should turn around then. What I'm afraid of is that I add back to it only to receive a maybe 3-5% if I add back from this position. I close it up completely at a good gain, but if I add back from this position and it corrects once more in January, then I may be looking for a maximum of 5% gain, and that is not what I want to do here. I would like some more gain and also a much better opportunity because it's not oversold. It just triggered the sell signal on December here, then it's sold off, and it's pretty much sold off aggressively, so we will see here a turn back. But for what I'm looking after is something like this on an RSI, massively oversold, and that would be a great buying position, great buying opportunity, and then from there dollar cost averaging back into it. I did start this a bit later on. I wasn't a big fan of dollar cost averaging into things because you do have good opportunities, and I am a opportunistic investor. Also, I would like to have companies that I hold for a long time, and that just didn't play into my thesis here. So I did dollar cost average into it. I got their dividends. They will pay out their dividends, so I got those, had some profits, took those profits, and bye-bye. So let's talk about what positions I bought. First things first, I finally believe that I had a good buying opportunity here in Brookfield Corporation. So on a MACD, massively oversold, on an RSI, not oversold, but Brookfield normally does not get that much oversold. The last time it was in 2023 where the entire market had its hiccup. So I think this was a really good opportunity of buying into Brookfield, which is a company I'm kind of planning to hold on for, I would say, 20 years. So Brookfield is currently at 0.61% of our portfolio, and I'm looking to add even more to this position. I love Brookfield Corporation. I'm promising to do a video on Brookfield and just not getting the chance to do that. It's a really complex company. It's in a investment company. They also have shares in a lot of energy stocks, or actually not in energy companies. That are none of the companies that they have stakes in are public companies. They buy companies and they buy a huge share from in their companies, so they're taking kind of over that, they're putting in their management team, which then makes those companies really efficient, but they do not have stakes in any publicly owned companies like Warren Buffett's Berkshire Hathaway does. So it's pretty much the opposite. They also don't mess with, Berkshire Hathaway does not mess with management, and they buy good management, Berkshire Hathaway, and Brookfield also buys good management, but they kind of get their fingers in there. Okay, the next company that we opened up a position in is Alibaba. Alibaba. Alibaba has had a very good pullback. It's currently on a sell signal, so this could pull back even more. But I'm pretty confident with Alibaba's position right here. And I'm also confident with the fact that in the near future, the Chinese government is going to stimulate the Chinese economy once more. And also, I think from the sources that I'm reading from, that there's going to be one of the last, but one of the biggest stimulus. And if that fails, then China is going to go into a recession and everything's going to go to, well, nothing. But until that moment comes, I'm going to invest in Alibaba, and we rose our Alibaba position to 1.93% of our portfolio. But Alibaba is not a long-term investment. I only bought this for a trade. So as soon as opportunity comes, I'm going to completely sell out of Alibaba. Look for another buying position opportunity. Next up, we opened up a new position in Exxon Mobil. Exxon Mobil is a energy provider company, mostly oil and gas, and also uranium. I love Exxon Mobil. I had it, owned it, sold it, always made money with Exxon Mobil. Exxon Mobil is currently massively oversold, and this is why. So they're oversold on an RSI. They're currently at the 20 RSI on a MACD. Their divergence is 1.11%, or actually just 1.11. Doesn't have to do anything with percentages. So it's a massive divergence from buyers and sellers, and they are yearly chart. So they're pretty much back at square one. So if you have bought ExxonMobil back at the beginning of the year, you would be at zero almost. ExxonMobil does yield a pretty good dividend, currently at 3.74% dividend. And that is why we opened up a 2.55% in our portfolio. I just want to quickly mention for all of you who wish to open or were looking to open a position in Novo Nordisk, they had one of their baddest days on Friday, opening up with minus 17 or minus 27%, 20.72%. So if you were looking to add Novo Nordisk to your portfolio, this could be a buying opportunity because only on technical levels they are massively oversold. So you could just ride a little bounce from here, but please do your own research. I am not a financial advisor. Do not take any financial advice from me. I'm just a YouTuber. And I did not add to the position, but I do look forward to add to Novo Nordisk. Furthermore, we opened up we added to Meli, ticker symbol Mercado Libre, ticker symbol Meli. Also for ExxonMobil, it was XOM. For Novo Nordisk, it's NOVOB, because it's the B share. So let's move on to Mercado Libre. We increased our position to 3.28% of our portfolio. Mercado Libre with the ticker symbol Meli is on a oversold path from MACD being oversold and RSI on a 35 RSI from 50. And you could, if you never heard about Mercado Libre, it's one of South America. So let's just call it Walmart or Costco, whatever you want to call it. So I just increased my position into that portfolio. I just increased my position in the portfolio to 3.28%. Next stock that I added to my portfolio, opened a completely new position, is Hims and Hers. I opened a 3.49% I opened a 3.49% position in my portfolio. I already bought Hims and Hers, and when I was talking about selling it last time, I sold this somewhere up here. So I opened the position here, sold it up here, then it went up once more, and now I believe this is a really good buying opportunity. It's not massively oversold, so it still could go down even further, but I think this is a pretty good opportunity to buy Hims and Hers. So this is why I added to my portfolio, and once again, this is only a trade position for me. Next up, I opened a position in one of those companies that I'm going to hold for the rest of my life, I believe, in Constellation Software, ticker symbol CSU, opening a 3.91% position in my portfolio. Constellation Software, I don't think there's any other company like Constellation Software. So what they do, they buy companies. They're basically software companies. They identify exceptionally good companies and they buy them and they make profit off of them. So they take stake in those companies and they then take profit from them. I also increased my position in AbbVie. I increased it to 4% of the portfolio on the grounds of its pullback. And then I also increased the position in Target to 4.70% of my portfolio. Again, Target is in a buying streak right now. So even though this could have another pullback, I consider Target to have a massive opportunity due to the fact that it has a massive sell-off. That I added just a little bit to AMD, increasing it to 5.62% of my portfolio. And this time AMD is on a a oversold RSI. So I believe this is a really good opportunity to add to AMD. Let's just see from where this will take us. So let's just see where this one will take us from this point on. Just as Google had its best last 2 months, AMD could be the next one that is going to come out of the gates and surprise us with a really good chip and take market share from Nvidia. Okay, so these are my updates for the portfolio. Let's just go over the risk assessment for the next week, and then we're going to close up the video here. I believe it's long enough. So let's go to risk assessment, risk meter. So we had a massive sell-off. Let's go to the ES1. We had a massive sell-off in the markets last week. We have our MACD on a sell, which are going to say that this is a low risk for the markets for the upcoming week. Then we have our RSI at 49, coming back from almost 40, 49, also a low risk in the market. Well, 49 is almost 50, so let's just say it's a medium risk in the market currently. It could have a couple of hiccup days here. We had a correction in the S&P, so I will consider this as a low risk. Looking at economic news for the next week, we only have durable goods on Tuesday, and anything else than that we have nothing. So no major economic news, which is a low risk. I currently don't see any. It's the weekend, so I currently don't see any kind of geopolitical tensions, and I could almost stop here. We're very well on the 50% risk in the markets, so I would bet on a jump back in the upcoming days. The markets digested that economic news from Fed Chair Powell, and I think that we are going in for a rebound in the market closing the year. We have also Christmas before us, so nothing that should stir up. Also, I cannot predict Black Swan event. So if there's a Black Swan event happening next week, as always, well, the Black Swan, what are you gonna do? Okay, thank you so much for watching. Hope you enjoyed it. My name is Novo BM. This was Wealth Done. Don't forget to share, like, and subscribe to the channel. Click that notification bell in order to get notified whenever I post new videos. With this being said, catch you next time. Stay safe out there. Bye bye.